Hey everybody, welcome to the morning market briefing. I was just listening to tunes. They cut out, so sorry. Didn't realize it was 8:30. Hope you're doing well. Monday, March 14th, Pie Day. Big deal. Ben, you gonna crush some pie today or what?
Yeah, we had American Pie playing earlier, but yeah, big day for the math people.
Big day for the former mathletes like myself. Hope everybody had a good weekend. We're gonna jump in. Starting really probably on the topic you guys would expect, looking at Russia. So Russia continues its attacks, getting closer and closer, still staying inside of Ukraine, but closer and closer to the Ukrainian border. They had an airstrike on the Ukrainian military training center that's only about 10 miles away from the Polish border. Killed 35 people on Sunday morning. This comes after the Kremlin has made it known that anybody that supplies weapons to Ukraine, they would be viewed as legitimate targets. Ben, as we're sitting here, we're starting to see, I guess, a little bit more speculation of involvement, a little bit more involvement from countries other than just Russia and Ukraine. I mean, obviously, we've mentioned the proximity to Poland that we're facing, but also getting some concerning reports and speculation as it relates to China and even India on the economic side. Talk us through kind of where things are going right now.
The neutrality or perceived neutrality of China and India so far has really not been good for the US's policy, where we're trying to impose these sanctions and try to have some discipline and really hurt the Russian economy. But the problem is that Russia is now leaning on these countries like China and India for support. So allegedly, Russia did ask China for military equipment. They have since denied that and said that they have plenty of equipment themselves. They don't need to go ask China. But it also comes amidst this pre-planned meeting between National Security Advisor Jake Sullivan and the Chinese top diplomat Yang Jiechi. They're going to be meeting in Rome. And it was interesting because when the White House was talking about this meeting, they said, and it'll come in the context of the Russian invasion of Ukraine. And China didn't have anything to say about the Russian invasion of Ukraine, simply saying the key issue of this meeting is to implement the important consensus reached by the Chinese and US heads of state in their virtual summit in November last year, referring to the virtual meeting between Xi Jinping and President Biden. So China is going to continue with the optics of diplomacy, but in actuality, we kind of know what they're doing. Meanwhile, India says that they have actually received an offer from Russia to buy Russian oil at a discount. So I would imagine that China's received the same offer or even a better offer, but just isn't publicizing it. What India says about this deal is that typically, India buys 2 to 3% of its oil supplies from Russia, so a similar percentage allocation to what the U.S. does. And they say, quote, Russia is offering oil and other commodities at a heavy discount. We will be happy to take that. We have some issues like tanker insurance coverage and oil blends to be resolved. Once we have that, we will take the discounted offer. India has really been hit hard by energy prices. They've also been hit hard by fertilizer. They have a massive government subsidy program in the fertilizer business. So when fertilizer prices go up, that's just money out the door for the Indian government. So what they're trying to do is offset that. And they can do that by taking advantage of some of these discounts that Russia's providing. So to the extent that the U.S. is using economic weapons to hurt Russia, Russia is using economic leverage to get people on their side, because China, especially, highly transactional, India to a lesser extent, very transactional, and Russia is utilizing that to make sure that they continue to receive funds for the oil and energy they produce.
Good deal. Russia also threatening to seize and even potentially seize assets and potentially arrest people from U.S.-based brands that are leaving Russia. This impacts companies like IBM and McDonald's. Russian prosecutors have called and visited a broad range of companies. They've delivered these warnings. They've talked to tech firms, banks, apparel firms, food groups, all of this stuff, and they are threatening to potentially seize items and even trademarks. So a little bit of a battle over intellectual property and actual items. as it relates to the businesses looking to leave. And meanwhile, the Iran nuclear deal really just continues to be on the ropes. And that's really, I think Vinny summed it up well. It's really due to the destabilizing force that Russia is in the deal. It's possible that they could try to exclude Russia and push forward with a deal that does not include Russia and do something there later. But it's really a relatively volatile situation. Would you agree?
Yeah, I very much agree. I mean, I think even with Russia in the deal, I think it's a weird deal to be making at this point in time. I mean, Iran in January sent 4 rocket attacks to the U.S. embassy in Baghdad that was carried out by an Iranian-backed militia group. And then just over the weekend, Iran tried to strike into Iraq, very close to the American consulate there. They claimed that this was a retaliation against an Israeli strike on Syria last week that killed 2 of the Iranians' commanders. So we're really trying to, it's really kind of the lesser of 2 evils, but I don't even know if Iran's a lesser evil at this point, maybe just an evil with less power. And so we're trying to do a deal with them. But again, it's an extremely difficult deal to go to execute. With respect to the to the executives of American companies doing business in Russia or that did do business in Russia, I would not want to be a McDonald's executive right now. With Russian prosecutors calling or visiting me, I don't imagine that is a very nice phone call or a nice visit to have. So I hope that they're going to be okay. But yeah, I would not want to be in that position right now.
Yeah, they're just going to seize all your nuggets, man. You're going to be in big time trouble when they get the nugs. COVID making comeback as if Monday couldn't get any better, any rosier. China has locked down a town of 17.5 million people for at least a week. Ben, is COVID going to be back as the #1 headline anytime soon, or is this just kind of the rolling wave of different variants taking longer to get to different places? Because I mean, we kind of joked about it over the weekend when Obama announced that he had COVID. It's kind of like, man, things must not be going well between Russia and Ukraine. We're going to make COVID a big distraction again. But we got China involved. We got Germany seeing a pretty good surge. What's the state of play?
Yeah, I think China is a function of the fact that they were so locked down and didn't have that kind of herd immunity that we've gradually built up through the vaccine and people just getting the virus in the United States. So I think that you're starting to see some cases increase in China, but it's important to note that although that this is gaining headlines, that Shenzhen, a city of 17.5 million people, is being locked down for at least a week. Cases nationwide in China, a country of over 1 billion people, just hit 3,400. So I think that we're still extremely low on the COVID stuff there. In Germany, you did have COVID cases hit a record for the 3rd straight day, but they never really came down from that first Omicron wave. They kind of just plateaued. So it's not like that they're increasing exponentially right now. So it's a mild increase that might be expected given everything that's going on right now and people just not paying attention to COVID right now. And it's also notable that the number of cases in ICUs are less than half of the peak set last year. So although you have cases that are relatively high, the severity of them is relatively low. And I think this gets to what President Biden was talking about in his speech in the State of the Union, that was basically like, hey, this is just going to be here and we're going to be dealing with it. And frankly, what a lot of people have been saying for even longer than a month.
Good deal. Thanks, Ben. This week we do have some economic data coming out Tuesday. PPI will be yet another look at probably relatively high numbers in support of high inflation. We'll get retail sales for February on Wednesday. But the big thing is, as we look ahead, is the Fed meeting on Wednesday. Tom, right now, I think the base expectation is for 1 rate hike. What are you keeping an eye on, and what do you put the odds of that at?
Yeah, so right now, if you look at futures, there's about a 9.5% chance that we get a double hike. My expectation is still 1 hike. I don't think that anything has materially changed that's going to put Jay Powell off the scent of just being a 1 hike guy. That being said, we are seeing the highest rates today that we've seen since the middle of 2019. The 10-year Treasury is at about 208, which puts us all the way back to somewhere around June 2019 in terms of the last time we had a 10-year Treasury this high. We are seeing some selling for the first time in a while on a 30-year as well. It's up to about a 245, which is about as high as it's been since the middle of last summer. So we're starting to see some real selling. I think people are getting into the mode of rising rates. The short end still concerns me. I mean, 2-year Treasuries at a 181. I just think that's too high. So, knock on wood, my hope would be we'll get one hike and the front end of the curve falling on the expectation of fewer hikes for this year. But if you look at futures now, we're looking at 6.9 hikes for 2012. It's a big step up from last week. So, there's a potential in there for multiple double hikes coming, but I don't think it's going to be in this first one.
Good deal. Ben, what else are you keeping an eye on this week?
There's some earnings reports coming out on Wednesday. We have earnings out of Lennar. Everything that I see in terms of housing, especially on the real-time data, is actually still very good. So I'm interested to see what happens with that. You have FedEx on Thursday evening, and then you also have a big investor day out of American Express on Wednesday. So that'll be the entire day. That'll be a little bit of a sideshow because you do have that Fed meeting going on at the same time. But American Express will be a really good gauge of the reopen and how consumer spending is trending. Next week, we have Nike earnings, which will be something that we'll be watching closely. But overall, that's what it's all going to be about the Fed this week.
Good deal. We'll wrap it up there. We'll be back tomorrow morning at 8:30. Hope you guys have a great day and a good week. Talk to you soon.